things about trading Forex is that you don't actually know exactly which trade is going to be a crazy winner or just another loss.
What's up, everybody? We are currently live.
We take away the weekly.
Trace back down to orthodox stance. That price is going to be bullish.
Point sort of chasing the market. I was more than happy to stay flat.
Hello everyone.
What the kangaroo tell?
Always recommend trading on the 5 minute.
Some of these exotic pairs and pretty steady uptrend, making these higher highs and higher.
Mostly trend following.
The stimulus in a certain way.
Good morning, welcome. See you in the chat show. Ron, Moses, Nadir, Tony, let's go. All right, so I got an interesting stream for y'all today. So we're gonna go over the gold trade I had today, and also the US30 trade I had today, and I'm gonna show you how you could have caught this trade yourself, both of them. I'm gonna do a top-down analysis for how I look at the chart when I come on in the morning so that y'all can get an idea. Okay, so first, we're going to start off with GJ because it is my favorite pair. But I just want to point out that GJ has been consolidating, right? So if I delete these lines here, all you see is that, we're in a consolidation zone. So what I want to say is, even though it's my favorite pair, because I see it consolidating and there's no like trade open, I'm not going to take a trade, right? You don't take a trade in consolidation because that's just how you empty your account. Right? This just means that price is indecisive. It doesn't know whether it wants to go up or down. So what we can do is we can place our zones. So if you see here on the 15 minute, zoom in a little bit, I placed my resistance zone on top of the candles, and I placed my support zone right here, right? And what I'm waiting for is I'm waiting for price to stop playing around in here and give us the break, right? Because price moves three ways. It moves sideways, it moves up, and it moves down, right? So if it's already moving sideways, it can only go 50-50, right? It's going to go up or down, right? So, trading is mostly patience. And if I break this down to the 5 minute chart, let me show you what I saw. I kind of see like a triangular pendant here. So that's what those trend lines were. Started to draw this line right here, as you can see. And, when you draw your pendants, just based off of my trading experience, they're not always going to be perfectly drawn to scale. But what I do, my tip would be is to just make sure your lines really like touch the candles, like touch the wicks, right? You don't want your lines to be like way out here or something like that. Like you want to have the closest lines that you can possibly get because it's going to be more accurate, USD Cad, please. Yeah, we can go over that after, right? So, this is just me trapping price. So like I said, it's consolidation. I call it Wick City when I see a lot of wicks, right? So I'm not going to trade it. Let's move on to the next one. So we'll talk about USD Cad, and then I'll move on to the gold trade. USD Cad, right? Now I haven't even looked at this today, to be honest with you, so that's why I'm going to hop over to the daily because I haven't even seen it. Okay, I'm going to show you what I see. Just based off of the daily chart, what I see is that we have a resistance zone right here, right? Price came up twice and it rejected it. So let me go on the 4 hour now. Let's get a better look at this. And if you don't understand it, a tip I have is to get your paintbrush and to just paint, right? So you can follow price like, okay, price came up, it rejected the zone, price came down, price came up, it rejected the zone. Now we're coming down, right? So that's another way that could help you follow the flow of price. Okay. Another thing is we have these wick up rejections, right? Price is rejecting the gold to the top side, pushes down, right? It broke through the zone here. The next candle wicked up, rejected to go to the top side and push down. So that could have been an entry right there, right? So let's go down to the hour, see what we got. And this is when I start to adjust my zones. So I'm going to delete that major zone. And I'm just going to put this right here, right? And I'm going to call this major zone, right? Because it is a major zone. Okay, and then when I do graph out things, I like to graph them out on the 15-minute. It's just my personal preference. So when I look at this on the 15-minute, I kind of see a falling pendant as well. I kind of see this. You know, if you notice, by the way, this moves the opposite of GJ. So if we kind of see a pendant on GJ, you know, you're going to get a pendant on these other pairs as well. And it looks like we're breaking down, right? Doesn't it look like that? Like I said, it's not going to be drawn to scale. It's not going to be drawn to proportion, or it could just be a fake out, right? We don't know, right? But I just want to point that out. So what I would do here is I would look for support and resistance. So right here we have support. I see these wicks try to come down and they rejected, right? And then right here I see resistance. So what I'm looking for a trade, if you want to look at price action, I'm looking for price to break a major zone and have clean candles. So if price breaks up, we do have these wicks here. Yeah, it could fill out these wicks, but I'd rather have clean candles. And this isn't clean to me, right? What clean candles are is this. These are clean candles. Nothing but just straight bears all the way down. Those are clean candles. These candles got wicks and all that stuff. That's going to give price a hard time. So even if it does pass this zone to go up, I'm not going to look for a buy entry because I just personally don't like it. For me to get a buy entry, I'd say it'd have to pass this resistance, right? Because when I look left, this looks a lot cleaner to me, right? So I'd have that there. And as far as coming down, right, for sells, you know, you look left, you got a little support here, you got a little support here, got these wicks coming down. You know, it looks a little, you know, it's not too clean enough for me personally, so I personally wouldn't take the trade. I'd probably just watch it and try to like take notes and learn. But if you come back on the hourly here, you can see it's just a whole bunch of wick city, right? And we do have price, you know, price does like to fill wicks, but like I said, wicks can give price a hard time because you have to remember wicks are ranges, right? It's not an exact opening price or closing price. It's just a range. You know, we could fill a wick, but also we just come down and make our own wick. So personally, I wouldn't take the trade. What's going on, Chris? I see you. Oh, the NZD, I don't trade that pair, but maybe I'll take a look at it after. All right, so that's basically USD Cad. So I'm going to move on to gold, and I'm going to show you how I caught this on my stream earlier. We had this gold trade. I'm going to show you. So we're going for 40 pips, but I ended up getting 34. So what I'm going to do is I'm actually going to put this in replay mode and show you why I decided to take this trade. I believe price was like right here maybe before I took this trade. Let me see what it looks like. Something like that. Yeah, okay. So it was looking like this. All right. So I'm going to do is I'm going to delete my chart and I'm going to do a top-down analysis from how I came on to this chart in the morning and why I decided to take the trade, how I graphed it out and all that. All right. So we'll start from the beginning. Let's see. Okay. So on gold, on the daily, I seen that, you know, price came up, right? Price came down. Now price is rejecting to go down. So what are we on? We're on a support, right? So if I draw a zone here on support and I bring it over, what do I see? I see that price had a support here, right? And price had a resistance here as well. So what does that mean? That's 3 touches. I always say 3 touches on a zone makes it a major zone. It makes it an important zone, right? So this tells me that this is probably going to bounce up. The other thing I saw was when I went to the currency strength meter, I looked at USD. I saw USD is weak, right? So when USD is red, meaning that it's weak, gold goes up, right? So let me just put that here. If you split this in half, let me get my paintbrush, right? We split this in half. USD is weak, so USD is going down. So the other half is gold. That means gold goes up, right? And what's first in this pair? Gold is first. So that's what this pair is going to do. It's going to go up. All right. So that's how that works. Back here. And again, if you don't have the currency meter, you can always just look at the dollar. This is the dollar. That's what it was representing. All right. So at the time, it was right around here, 7 o'clock. It was right here at the time, right? And I seen gold, I'm sorry. I seen the dollar breaking down, right? I seen the dollar continuing to be weak. It's continuing to push down, right? So we have a weak dollar, right? So that's how I got my eyes on gold to be, see here. That's why I said that we would have a buy on gold, okay? So let me just put this down to the hourly. See, let me put this back. Let me just get this out of replay mode. There we go. Okay. Sorry, I was confusing y'all. All right. So when I was looking at this, it was right here. All right. So again, so let's start over. So we had the support. I'm on the 4-hour now. So we had this support, right? And I said, okay, gold's going to go bullish because the dollar's weak, right? All right. So what do? I look for where can gold go, right? Where can it go? Well, we have a resistance right here. So I said, okay, gold should be able to get up to here, right? And this is a 4-hour chart. So, this is a lot of pips. If I measured the gap, that's 40 pips. So I said, okay, that looks cool. And we could potentially maybe fill out these wicks as well, maybe, right? And if price wants to break through that resistance, we could potentially come all the way up, which did not happen, but, it's just a theory. So then I went down to the hourly chart and I said, okay, where are the bank zones, right? Because gold is in favorable of bank zones as much as it is as support and resistance. So I put a line here. And remember, bank zones, you count them by zeros, right? Zeros and fives, right? So I always like to remind people, think about a dollar, right? So you have a dollar, you start at 0, a quarter, right? 50 cents, 75 cents, and then you got your full dollar, right? Think about it like that. What do you see in common here? 0, 5, 0, 5, 0. So the banks like these numbers with zeros and fives, okay? That's what I noticed. So it's up to you. There's no right or wrong way to do this. If you want to count by hundreds, count by hundreds. If you want to count by 50s, count by 50s. If you want to count by tens, count by tens, count by fives, count by fives. This is all a personal preference. Okay. For this example, I counted by 50s, right? So I just looked for the next major number, which is 1800. Start with a solid number. Okay, so this is 1800. So what I did was, since this is a range, I moved my zone to be in the middle of this, right? So I said, okay, this is my zone. This is the zone, the next bank zone for price to go to. So I'm going to make that a bank zone. Now I have to figure out where was the last one. So if I minus 50, because I'm going to count by 50s for this example. Again, you can count by hundreds, 50s, it's your choice. This is the next bank zone. All right, let's make that a little. All right, this is the next bank zone. All right, so if you can't see the numbers, it says 1800. This is 1795. All right, so just minus 5. So if we minus 5 again, what's the next one going to be? 1790, right? We're just minusing 5. Think of this as 100. And then if we go again, let's say we want to put more, 85, right? So I'm just minusing it by 5, okay? So I'll put up the 1790 for example purposes. Let's see here. Oh, perfect, almost on the spot. 1790, right? Bang. And just to make this correlate with everything, I'll just put a zone over this. All right. So we got 3 bank zones. Bang, bang, bang. 1, 2, 3. Cool. So when I see, again, overall bias is that price is bullish, right? So if price is going to break through this bank zone, then that'll be my time to enter to get up to the next bank zone, right? So that's what I'm looking for. So let's delete this. We don't need this. We know we're going bullish. We had all of our confluences, right? So what I did was I scaled down to the 15-minute or the 5-minute. Sometimes I play back and forth between the 15 and the 5, depends. All right, and let's just put this in play. So what price did was price started to consolidate around this area, right? And it kind of made like a funny pendant. Show you right there, boom. All right, so those of you who like pendants, once again, this was like a small one, miniature one before it like really broke up. So a lot of times you're gonna get these little like consolidation zones on top of bank zones before price breaks. So I kind of knew that, so I waited. All right, but if you look here, even if you just watch on the 5, what do you see on the 5? Even without the pendant, what do you see? You see a bullish engulfing, right? Huge bullish engulfing candle, completely shot up, right? Another breakout, broke above the zone here, so you know we're going bullish. So what do? You know, you can take your entry on the next candle, as I always advise. Okay. Oop, my fault. So, you know, we impulse got in as soon as, actually we got in as soon as price broke above this resistance here. So let me put a line here. Literally as soon as price broke above this resistance, because our bias was bullish overall, we got an entry here. All right, so that's when I told people, you know, you want to take those buys, go ahead and take those buys. So that's what we did. Stops was below the 15-minute candles. If I go to 15-minute candles, stops was below here. 14 pips stop loss. Now, what were we going for again? We're going for 40 pips. All right, that's 40 pips. All right, so if I press play, I'm going to show you how this played out. I think it was a 15 pip stop loss, but nonetheless, same thing. All right, so that was our entry. Let's play this out. Bang. All right. That's how that worked. So that's how we took that zone. Okay. Now what you're going to see is the timing of this is 7:45, and we knew we had unemployment news at 8:30, right? So unemployment news had to do with USD, right? The US dollar, and you know that the dollar is what affects gold. That's how gold moves. So, you know, it's time to get out. It's time to take a profit. You know, you're already seeing this candle coming down, right? So I did hold my trade here. I should have just closed it. I ended up closing it around here at 34 pips. If I put this in play, you're going to see the news. It's 8:15. And notice this double wick rejection, right? I call this a tweezer top. I actually have a video on tweezer tops, right? This is price showing a reversal, right? So that tells me price wants to come down. On top of that, we got news in the next 15 minutes. So let's see what the news candle did. Let's put it in play. Bang. That was the news candle. So you may be wondering, what happened with unemployment claims? Why did gold shoot down? Right? If I put a cursor here, you're going to see that this was exactly the news drop at 8:30, right on the dot. All right. If I go to the 5-minute, that's how you would have got into this trade. If I go to the 5-minute here, and let's say you're a scalper. Remember, these are our bank zones. Say you're a scalper. There's a support right here. Let me delete this. Let me delete that. All right, there's a support right here, right? So while you're waiting for the news to drop, 8:25, 8:30. Okay, this is the 8:30 candle, right? So you could wait for that next candle to give you a confluence, right? This next candle after the news, you literally had 5 minutes. You had 5 minutes to do this. Click. News was good. Okay, that tells you that gold's going to go down. See how that took me what? That took me 10 seconds and you had 5 minutes, right? And you see the break again, that's when you could have entered your sell, right? So you could have entered a sell here. Okay. Stops above the candle, right? Little 6 pip stop loss. You could have did that. Go on to the 15-minute. You see these nice, beautiful, clean traffic candles on the way down here to support. You could have did it like this, or you could say, yo, where's the next bank zone? Well, we're counting by fives, remember? So this is 95. So 95 minus 5 is 90. So we'll go for 90. So that's our TP. All right. I'm just showing you how you could trade this news. All right. Going for 30 pips. All right. So that's your TP. Let's put this in play. Now you would have got stopped out there. Okay. So this is one of those trades where it would not have worked out in your favor. Why? Well, the news happened at 8:30. Okay. It had its initial push. It decided it didn't want to continue and ended up coming back up. Right. So this was a little loss. This was a 6 pip loss. All right. So what's the lesson we learn here? The lesson we learn is, hey, you don't always have to trade news, and news is so volatile to the market that it could really trip you out. All right. So let me put this back where it is. Now we look at a higher time frame. This was a retest, right? So say you had your stop loss here. This was a retest. All right. So, you know, price ended up coming up, making a lower high before it continued to come down. And that just happens sometimes. You know, the overall move was for it to go down, but it just so happens that, you know, people decide to buy it up, you know, and that happens on gold. So that's also why gold is tricky to trade. You know, sometimes your buys could be right, you know, where it's overall sell, but it is what it is, you know. All right, so that's gold. Let's hop over to US30. So this US30 trade, this was a quick one, actually. I don't know if you can see it. It's actually this little 50 pips right here. And 50 pips is not a little. Don't get me wrong. 50 pips is a lot. All right, 50 pips is a lot. But check out where it is now. Imagine if I didn't take my profit. I'd be up 190 pips right now. Wow. That's amazing, you know? So let me show you why I took this buy. All right, let's put this in replay mode. Put it right there. I think I was on the 15. Yeah, I was. Okay. So this is what I saw. I saw that price was consolidating. Same thing like GJ, right? If I go back to GJ, price consolidating, right? Price was consolidating here. So what I was waiting for price to play out and show me a break, show me something. And I decided to break up. Okay, cool. So what I did was I went on the 15-minute, which I'm on, and I said, okay, if price breaks up, where can it go? Because these candles look kind of funny, right? They're not the clean traffic candles, but we do have unemployment news, which means we're going to have volume. Charts are going to be volatile, so we could get a push. You know, as long as you have that volume, it doesn't matter if you have clean candles, you're still going to get that push. Should you use trailing stops? Yeah, I mean, trailing stops are good. I mean, it's all up to you, right? So yeah, so if you look left, we do have a minor resistance in here. I have another minor resistance in here. And then we kind of come up to about this point, right? So I didn't want to take the overall high resistance, so I took this one in here. Again, it's just all from experience, to be honest with you. It just so happened that I guess the right resistance in here, because that's where price retraced. But you know, it's not magic. It's just from experience, putting time in on the charts. Anyway, if we scale down to the 5-minute, this one's real simple. I'll tell you the step-by-step process of this. Let's go back. So step 1 is to wait for price to break a zone, right? So I'm just going to put break a structure for time purposes. Right, we'll wait for a break structure. Price broke through. Now, what's step 2? Step 2 is to wait for the next candle to show bullish momentum, right? That's what you want. Okay, that's step 2. So if we go back in time, what happened here? You may say, oh, Lens, this one broke above the zone. But what did the next candle do? The next candle did not show you bullish momentum. The next candle was bearish. Now let's hop over to example 2. What happened here? Oh, okay, yeah, we broke above the zone. That's step 1. But what about step 2? Wait for the next candle. The next candle showed you it wants to come down. All right. Let's hop over to example 3. What do we got? We got another break. Okay, cool. But we got to follow our rules. And this is why it's important to always follow your rules. What's up, Rages? I see you in the chat. Always follow your rules. All right. Next candle needs to show us bullish momentum for us to take the impulse entry. Let's check it out. Bang. Impulse entry. All right. So this is where we entered right at the top of this wick here. And this stop loss, now this one's insane. Check this out. Tell me who else is going to give you a stop loss like this in US30. This stop loss was literally 9 pips. 9 pip stop loss in US30. That's $9. Come on now. $9 with a 0.01 lot. Now, if we come up here, our TP is 50 pips. All right. So that's what we're headed for. Now, all you got to do now is just let it rock. You know, just let it play out. Okay. The other way you could have approached this was, I believe we did have our bank zones up here as well. So let me go ahead and put that. I think 3,500. Yep. 3,500. All right. So here's a bank zone. So now that we did it the price action way, I'm going to show you the bank zone way. So if we look at the bank zone way, we have a bank zone here. Delete that. I'm going to put, and I'm just showing you different strategies on how you could have caught this move. We have a bank zone there. We got 35. Let me see. $3,900. I put the wrong price on that one. My fault. Get it back. All right, and we got the next bank zone right here. Yeah. 50. All right, so let me just copy this. And then the last one will be right here. Right, so I just do one in the middle and I do one at the bottom and then I'll do one at the top. Right, because there's no need for all these extra zones, you know. Be 50. Okay. So remember, this was our original TP, but if you want, you can just use the bank zones here. Let's say you looked at it that way. You would have got in this buy earlier, right? You would have got in it earlier. I hop on, let's see, like right down here. You know, but if you're a conservative trader, I always tell you wait for the next candle. So boom, this price action way is to wait for the next candle. But again, if you just straight up bank zones and you just trust your analysis and all that, you would have took this trade. Also, let me show you something real cool. Make sure you're paying attention to this one. So this is a pendant as well. We have a pendant breakout. Remember I showed you we had pendants forming today on all these pairs? Check this out. Here's a pro tip for you. When you have a fake out, that means price is going to go the other way. Right? We have a clear fake out here. Clear fake out. Fake out to the downside. You already know we're going bullish now. You already know. Right? And the other reason we know we're going bullish is also because gold flew up, right? Our bias on gold was bullish. The dollar was weak. So again, same thing like on gold, when the dollar is weak. Let me draw this out for you. When the dollar is weak, US30 goes up. It's real simple. Why? Because this is first in the pair, right? These are two separate things. If I draw a line in the middle, they're two separate things. This is what's first in the pair, so that's what we're doing. We're going up. So that's another reason why we knew we were going up. All right. So again, you could have took an impulse entry down here, which you would have had more pips. All right. Let's put this in play. Okay. You see that? Now, if you remember, our original TP zone was that 50 pips. I believe it was right here. Right? That was the original TP zone. So I got out right here. Literally right here. I closed my trade. Well, I didn't have to close it because I had a TP in, but you know what I'm trying to say. All right. Now that was just luck. You know, like I said, it was just based off of experience, you know, but as you can see, if we go back to live to what the chart looks like right now, you know, jeez, we would have been up. We would have been way up if I would have held this up. You know, I guess I could have took another entry, but you know, it's all good. You know, you don't get FOMO, you don't get greedy. You know, remember, this is the next bank zone. So what do you see? You see a bullish engulfing, breaking through the bank zone. Look at the strategy again. Breaking through the bank zone, impulse on the next candle, stop loss under that candle, 16 pips stop loss, and you're up. You see what I'm saying? That's 108 pips right there. You know, so the strategy works. You know, it's all about putting in that time and just practicing it over and over and over again. And what I want to show you is, you know, that little 50 pips. For those of you who are using 0.1 lot size, I just want to show you the power of what 50 pips can do, right? Because you can't catch 50 pips every single day on like EU, GU, GJ. You know, you can catch 10 pips every day for sure. But to catch 50 pips a day, you know, you got to trade something like gold and US30, right? So I just want to show you something just to get you thinking, just to blow your mind. You know, if you're losing at trading right now, do not give up. You know, use me as an example. I've emptied my account plenty of times, probably more times than you've emptied your account, you know, before I became successful at trading. So I do know what I'm talking about. So check this out, right? If you get 50 pips on US30, let's say, you know, you're using a 0.01 lot, right? For beginners. That's $1 a pip. So that's $50. Okay. So, you know, you can master this move with a 0.01 lot, right? So the point is you want to master these moves so that you can move your lot size up, right? And let me show you the power of mastering this move. You're literally doing the same amount of effort, the same amount of work, and you're going to make more money, right? So we got 0.02, 0.03. We're going to skip for time purposes to 0.05. This will be 250. You know, and we could skip 0.06, 0.07. We'll just go straight up to 0.10. Now this move to you is $500. And this is just taking one trade, chat. One trade. This is you pressing that buy button one time, right? I didn't say press it twice. I didn't say press it 3 times. You can go ahead and do that, you know, and you can multiply that out. But this is just pressing one buy. You know, you went from making 50 on this trade that you perfected because you practiced it to making 500 every time. All right. Now let's get bigger. Let's get a little bigger. Let's go up to 0.5. Now, what is this? $2,500 on one buy. Remember, you took out one buy. I'm sorry, this is supposed to be a 5. On one buy, you're doing the same 50 pip. You're doing the same little move. Same little move over and over and over again. Now you're making this. Now, some of you, you know, you're making that in a day. Some of you, that's how much you make a month right now. Some of you, it probably takes you a whole month to make that at your job. You know what I mean? So now you can replace your income. Now, let's say, you know, you move up. I'm sorry, you move up to a standard lot. Now let's turn it up a notch. Let's say you got a funded account. You know, funded accounts are really good if you know, once you get your practice in, you learn how to trade, because with a funded account, now you can use these lot sizes, right? So if you can use this lot size, now you're doing a little better. So let's check this out. This will be 5,000. Now you're making 5,000 for taking one buy. Again, that's if you took one buy, right? One buy. You're doing the same 50. You're doing that same little move over and over again, right? So don't think that it's not possible, but just remember what got you there. What got you there was consistency, right? What got you there was not trying to get rich overnight, right? Getting on the charts, back testing these moves, practicing over and over again, using your small lot sizes, and being okay with your $50 a day, right? And the same thing goes for GU, EU, USD Cad, you know, all those other pairs, all USD, any other pair, the same thing goes, right? I always say the same thing. I always tell everyone, go for 10 pips. You know, it's one of the things I did before I became consistent. I used a 0.01 lot. You know, I just started over from the beginning, and with 10 pips, that's $1. I made myself make $1 a day for 2 months straight. I took profit at 10 pips. No matter what, I closed the trade at 10 pips. That's what I made myself do. Because I told myself, this is the same thing as this. Let's say you move up to a 10 lot, which my lot size is bigger than that now. You know, I never thought I would get this far. You know, I'm being honest with you. That's $100 a pip. That's $1,000 a day. Okay, we'll just put 1K. That's 1,000 on one trade. You know, like I said, my lot size is bigger than a 10. But, you know, just for example purposes, that $1 a day, that's what that $1 a day got me. It got me here and bigger. You know, it's the same move. It's the same thing over and over again. So what I'm trying to tell you is, you know, don't be discouraged. You know, just use your 0.01. Stop trying to get rich overnight, because that 0.01 is the same thing as you making 5,000. All right. So every time you make that $50, $40, add those 3 zeros at the end, pat yourself on the back, because guess what? You just made a $3,000 move, $5,000 move. You know what I mean? And like I said, when you get into stacking trades, the money you can make is endless, right? It's endless. But, you know, what it takes is it takes consistency, and it really just takes you putting in time on the charts. But, yeah, do y'all have any questions for me? Gold is for big accounts. Big thanks, Lynn, for these lessons. No problem, Joseph. Thank you, Joseph, because I seen you in my live stream earlier. Shout out to Joseph. Do you look at the live PL when your trade is open? So I have this in one of my psych tip videos. I think a mistake people do is they look at their profit, right? So when they enter a trade, they just stare at it. They stare at the profit moving up and down. You know, staring at that number may really mess with your psych, right? So like, say like trades like these, where you get these wick downs. Imagine taking a buy here and it was making a wick down, and you just didn't trust yourself because you saw your money in the negatives, but you're only in negatives because it was making a wick down and then it pushed up. You would have closed your trade with a loss, right? Just because you were staring at yourself losing money, but it would have went in your favor because your analysis was right. You know, it causes you to overthink. So my advice is to not look at your profit and loss when you're in your trade. Why? Because you should have planned your trade out, right? So if you plan your trade out right, you know, just like when we're looking at this, I already have my stop loss in when I enter a trade. I know what I'm losing. I'm okay with what I'm losing. I'm going to lose 19 pips or 16 pips. You know, that should be, you should have a trading plan. You don't just hop into the market. If you hop into the market, then yeah, you got to look at your stop loss. But for me, you know, I typically use the same lot sizes, so I know how much I'm losing. Like, I convert it to money value. So say like my stop loss is 10 pips, right? Let's go back to using a 10 lot. Say I'm using a 10 lot. Then I know that my stop loss is $1,000, right? Then I already know that. So I don't need to look at it. You know what I mean? Does that make sense? You want to have a plan. But let's say my TP is 30 pips, right? My TP is 3K. You know, so that's a 3x return. You know, it's a 1-to-3 ratio. You know what I mean? So if you have your trade properly planned out and you have your stop loss appropriately, you should not be looking at it. No sound? Awesome. No problem. No problem. Got any other questions? Let me know if y'all have any other questions for me. Be happy to answer them for you. Appreciate that, Moses. Moses and Joseph and Rages, Chris, Don Q. Hey, Don Q. I see all y'all were on my stream earlier this morning. Ever trade futures? No, not for me. Not really for me. What I do trade is, I started with stocks in high school, so I still have my stocks and dividends and all that stuff. So other than Forex and indices, I do have stocks and stuff. But I had a little bit of Bitcoin. I had a little bit of Dogecoin, but I don't have it anymore. But those are kind of the only things I really trade. Euro Chef, have a look. I don't trade Euro Chef, so I really can't give you my expertise on that. Yeah, I'm watching your stream more and more. Thank you, Don Q. Shout out. Yeah, if y'all enjoy this, y'all feel free to check me out if you want. I'm on YouTube, you know. You just search up my name. Is this A1 Trading linked with Trader Nick? Yes, this is Trader Nick's channel. Yeah. Yep. Very educational. Thank you. Thank you. That's what we're here for. All right, Nick. I think that's all I got for today. Oh, look at you, Jay. Look at patience. I missed it, but it's okay because I got other trades today. But you see how I didn't trade at all? Even though it's my favorite pair, I did not trade in this range. I was waiting for it to break out. Now we're breaking out. Check it out. Live as we speak. Now, what I would do is I would look at the currency meter first. Let's check this out. Great. It's from my side. I managed to fix the sound. Sorry, misunderstanding. No problem. So here's what I don't like. So GBP is strong, which is fine, right? That means it's going to go up. But JPY, we need JPY to be weak to really get that strong push, right? If JPY is getting stronger, then GJ is just going to consolidate, you know? As always, a big thank you to Lens. Coming soon. Give me a follow on IG and YouTube. Thank you, A1. Yeah, I'm all set. I'm all set, Nick. When you're ready, I'm all set.
Hey guys, thanks for watching today's show. I hope you enjoyed it. And before you go, make sure to check out our guest today and also subscribe to A1 Trading YouTube channel if you have not already. Risk Calculator is a risk management tool built specifically for MetaTrader 4 and MetaTrader 5 to help you position size properly. Their easy to use software will allow you to enter and exit positions with lot sizes that are calculated for you, suited to your risk management settings that you allow for the tool. This is a big thing because a lot of us struggle with over leveraging or accidentally taking a position size too big, and Risk Calculator is there to help. Like I said, with the click of a few buttons, you're able to set your trade and the lot size will automatically be calculated for you so that it suits your risk management plan. In addition to actually setting your trades with the proper lot size, it also allows you to manage your trades as they're going along. Things like trailing stops, moving stops to break even, or even partial take profits are all tools or features available with the Risk Calculator functions that are available on MetaTrader 4 and MetaTrader 5. If you're interested in checking out Risk Calculator, there's a link down below in the description. And if you use that link, it does help to support what we do here on the channel, which is provide free trading content, again, by the thanks to the help of our sponsors. So thanks so much for watching today. Again, make sure to subscribe to us here on YouTube if you haven't already, and we'll see you back in the next one.